Hi everyone, welcome to another honeystocks.com stock market outlook for the month of May. Now, before I do the usual and of course switch over to my screen share and walk you through many of the charts, I've had a lot of emails, a lot of social media messages over the last few weeks, essentially just asking the same thing. Are we close to a bottom? What's going on with technology? Can we buy tech? What does value look versus growth? So I've got a lot of charts here for you, and of course a lot of individual names that I think you can add to your watch list for the next week or two. I'm sure you can understand at the moment the market is very, very challenging. So the charts that I'm going to present, some of them are on the fence of whether or not the charts are bullish or bearish. It really just comes down to the broader market. So please do, all your own due diligence. It's very, very logical that these charts could change significantly over the coming days. So be very, very aware of it. But I'll do my very best to walk you through a lot of what I'm seeing in the market, and of course, really communicate the answer to the question: are we close to a bottom? So let's dive into the charts. Let's try and figure out what's going on, and if you get some value, please hit the like button. Thanks. Now, before I get into this, as always, please pause the video, make sure you're comfortable with that before watching any further. Basically says that there is not any investment advice. Don't be silly. Please do all your own due diligence. Just to give myself a little bit of credibility, I'm working my way towards my CMT. Technical analysis is something that I'm widely known for in professional circles. I understand that with the work that I do, it's very much a case of what have you done for me lately. As we can see at the start of January, calling for big valuation reset, which I think we can probably all agree is something that we've had. I think with the small caps, put this out on social media back in November, highlighting the danger of a failed breakout. Exactly the same at the start of January with the S&P 500. And if you want to go a little bit further back, you could go and pick up my work on the crash of 2020. I have uploaded to my website the analysis that was provided to clients and members in the 10 days leading up to the crash. As you all know, I don't use the magical hindsight indicator, so hopefully you get some value from my work. And if you do get some value from it, please, as always, hit the like button. It helps to get my work out there. Subscribe. Let me know in the comments if there's any stocks or what you think will happen next in the market. It's a very, very complex, challenging time, I'm sure, for many. So let's dig into some charts. Now, I want to just spend 5 minutes here just walking you through the broader market. A couple of things that I'm seeing. Obviously, we've had the Fed announcement on interest rates this week, which of course I'm sure many of us understand the massive spike that we had post-announcement, and then of course the car crash thereafter. But when we look at seasonality, we are of course into the month of May. Now, like I said last month, I take seasonality with a pinch of salt. We can see that April traditionally is a pretty good month. I think we can all agree it's not been such a good month, but certainly when we come into May, the expectation is that we can have some kind of decent month, not spectacular. We have of course started May to the downside, so we'll need to just kind of see how things pan out. Now, with the individual names that I have prepared this week as well, I think what I will say is there are stocks going up, there are stocks going down, there are stocks chopping about in a sideways range at the moment. So what I've done this week is I'm presenting all cases. If you're bullish in the market, there's going to be something for you. If you're bearish in the market, there's something for you. And if you think that it's a sideways market and stocks will continue to chop sideways, there will be something for you as well. Last month I touched on the inverted yield curve. Now, just to give some data around the inverted yield curve, we can see that on a number of occasions we have dipped below zero. It has inverted, and as we can see over the course of history, it typically takes 12 months for a recession to kick in. Now, as we know, a lot of stocks have been taken out to the woodshed over the last month. Now, don't confuse that with a recession. It's we just have to be aware of the inverted yield curve. The worst could absolutely be ahead of us. You know, it could be 6 months down the line. It could be 12 months down the line. Nobody knows when something will kick in. But something that I do understand is when we do start to get these downturns and when we do start to get the recession, we know what that equates to with the stock market. We do, and I've highlighted obviously on the chart what happens. This is the S&P 500 index, and it generally isn't pleasant reading. So we'll need to be aware of that. Now, what I would say as well, with it being the start of May, last month we went out and we've got all the closing candles for the month. Now, something that I think every analyst on the planet has been keeping an eye on is the 10-month moving average. And as we can see, we've now definitively closed below very key level. Now, we know that historically this can start to trigger a bit of a problem. There's a very, I guess with trend following, that there's a school of thought that, you know, if you just keep it simple and you buy the market provided you're above the 10-month moving average, and obviously you exit the market when it dips below, this is where the problem arises. It can oftentimes be a big problem. On occasions it can, you know, certainly be a minor problem, sideways grind, choppy markets. It's not a lot of fun, but there are opportunities if you know where to look. Now, these are the four major averages. Now, I've just condensed the chart, just the charts for simplicity. This is how I'm viewing it at the moment. Some of you will have seen this floating around social media during the week. It feels like everybody on social media was sharing the chart because it's just, obviously I understand that it's quite clean, but I'm looking at the S&P 500 now. If you're looking to take buy positions, you probably want to see the S&P 500 hold technical support here. You probably want to see the Dow continue to hold technical support here. The problem that I have here at the moment, and you know, it's not any surprise here to anybody, is we've got an issue with the small caps. Now, I've highlighted here on the chart the move that we had on Wednesday after the Fed. Now, for me, that was obviously a big buying signal for the market. And what I was looking for was a follow-through day, which hindsight tells us we just didn't get. The market falling away, but it is concerning to me that in both the small caps and in technology, we've now started to close below previous lows. This is quite a big problem for me. If we have an environment where technology stocks are selling off, and I have a few of those charts prepared this week as well to show just how these key names are at pivotal levels. If we have an environment where technology is falling away, given the weighting that these have within the S&P 500, it could present a problem if the likes of Apple, Microsoft give up technical support. We've already seen that consumer discretionary relative to staples has started to fall away. I highlighted this one last month, and this is not an environment that screams risk on. The communications that I've had with my clients and with my members over the last few weeks has been very much a case of be very, very selective. It's not a massive risk on environment. Make sure that you're managing risk appropriately, and make sure you understand where your thesis is incorrect, because we do have a big headache with a lot of the major averages and with a lot of the ratio charts. Now, I guess the question I get asked most often is, Sam, when can we buy back tech? When can we buy back growth names? Now, when you look, I guess, at the growth names, and like I said before, a lot of names have been taken out to the woodshed over the last few months. A lot of the names that have been taken out to the woodshed are names that just don't have PE ratios. They're fundamentally not very good companies. So it's not any real surprise to me to see a lot of the growth names start to get destroyed. And when I look at the ratio between value and growth, this chart tells me that value is now starting to move above the July 2000 lows here. So we could now just be entering an environment where value names, I'm sure we all understand that energy has been an incredible place to be over the last few months. Hopefully some of you have done quite well from those energy names. And these are what energy names look like at the moment. Like I said, there are stocks going up. There are areas of the market that are going up. They're just not in growth tech. I can't emphasize this enough. It's something that, of course, I've been on top of for months. But we've got energy now breaking out. XLE is looking like it wants to break out above its December highs here. Now, when we see energy breaking out, if you have a predominantly top-down approach to the market, you're really just saying to yourself, well, if I like the energy sector, well, what names within the energy sector look appealing? Well, for disclosure, I own Williams, and it's an alert that's been sent out to our clients over the last few weeks. So Williams is breaking out. We've got ConocoPhillips. Obviously massive market caps here. These are not small companies, looking like they want to break out as well. Now, to the other side of that, some of you will have picked up the chart that I put out during the week. I got nasty emails. I always tend to do whenever there's bearish charts, but that's, I guess, the game that I sign up for. I put this chart out during the week, basically just saying, look, nobody's going to be playing in the metaverse and the stocks are garbage. Now, obviously, I understand that there's a case to be made for buying them, growth, and I think with Unity Software in particular, I've taken a couple of emails with constructive feedback, and I get it. But what I would say is, if we've got an environment where we've got the metaverse ETF breaking down, we've got Unity Software breaking down. This was put out to our clients last week as a high conviction short. Roblox is breaking down as well. Sorry, let me just clarify that. It wasn't a high conviction short. It was in our premium weekend analysis. But Unity Software and Roblox are both breaking down. The charts are currently bearish at the moment. So yes, we have stocks going up, but also we have stocks going down. Now, if we go and just have a look at the full chart for XLE, I think this chart probably shows it a lot cleaner. We've got 2016, 2018, and it looks like we've got a big breakout this week on good volume. Again, Williams costs bullish above $35. Resistance dating back to 2017 and 2018, and of course ConocoPhillips. Now, what I want to highlight with ConocoPhillips is ConocoPhillips has already made a 20% move in the last 2 weeks. Now, I guess that this might be an issue, and it might be something to consider if you are someone that likes to buy breakouts to new all-time highs. You do have to be a little bit more cautious when stocks have already made big moves in the lead up to the breakout. Those types of breakouts quite often fail. So what I would suggest with ConocoPhillips, and it's something that I'm going to be communicating with our clients this weekend, is let the stock break out. It will have to pull back at some point, and depending on what happens with that pullback, we'd be looking for a potential retest entry. Now, that's not to say you can't buy the breakout. You absolutely can. the thing could just rip off to $150 within the next 2 weeks. I have no idea what will happen. But if you are somebody that perhaps wants to manage risk, perhaps you might want to take just half a position, and then on a valid retest add the other half. There's various strategies that you can use, but certainly ConocoPhillips looks quite appealing. Now, again, just to touch on what I was saying at the start about the major averages and how some massive stocks are at key levels, I think we just need to look at Apple at the moment. Apple is on a massive trend line support level dating back to September 2020. What happens if this trend line breaks? I don't think that's good news for Apple given the strength of the trend line. So there's a case to be made that you can buy the dip on Apple if the major averages are going to continue higher. But the headache I have is if Apple breaks down and we have an environment where Microsoft breaks down as well, what I do understand is the more times a level is tested, the more likely it is to break. So I think with Microsoft, it could be a potential problem, potential headache if we start to break below 270 and we start to get into that 267, 265 range. AMD reported good earnings this week. Massive spike on Wednesday, of course, hit badly on Thursday with the broader market. It didn't escape my attention that today, Friday, I'm recording this just after the market close. AMD put in a positive day, so I'll be watching that one with a lot of interest. I am, of course, noting the volume on it. If it can get above 101, I think AMD could be a decent buy opportunity. To the other side of things, this could be a valid bearish retest as well. A lot of charts are looking like this at the moment, where you could make the case to buy it, you could make the case to short it. What you have to do is let price confirm what you should do. I don't like to take buy positions on stocks that look like this. I want price to move above the levels that I believe are key. And I think if AMD can get above 101, it could be a buy. But I do accept at the moment it is probably a valid short as well, depending on what your outlook is for the broader market. We've got Dow Inc. Looking for a breakout of a base above $72. The stock has been holding up like an absolute rock star. Low PE ratio, solid earnings growth. So I think above $72, that one could make a lot of sense. Altria, now this is of course going into consumer staples. We know with consumer staples that these are defensive assets, defensive areas of the market. It is bullish above $53, and I'm viewing this at the moment as an inverse head and shoulder. I'm looking at an inverse head and shoulder for Hewlett Packard Enterprises as well. I like it above $18. Antero Resources has been an absolute rock star. I've been covering this one for our clients and members since this breakout at $5. It is approaching our target here, which is historical resistance dating back to 2015, and of course there's just been massive buying volume on this one for a few months now. So that one's looking good. Blackstone Minerals as well, approaching a big level at $20. There's probably still another, I think, 15-20% upside. It's aligned with oil and gas. Like I said, this one's been provided to our clients and members back on the 25th of March, and it's obviously doing very, very well. Lithium Americas. Now, if you picked up my analysis that I put out last month, where I was just highlighting the danger with the small caps, and to be on guard in case there was a rejection. I also put out a chart for Lithium Americas. Now, Lithium Americas met our upside objective, 70% move. Since then, it's obviously declined hard. That's the chart that put out to our members. But above $23, I think you can remain bullish. But like I said before, with many charts at the moment, depending on what happens with the market, it would be a valid short if it starts to break below these levels. I think fundamentally it's sound. Obviously, I like lithium. I've done very well in this stock a few times. So very, very interesting to see what happens here next week with Lithium Americas. I think we've got a break out and a valid retest here. Again, Enterprise Products, oil and gas name. So yeah, I think there's probably some due diligence to be had there. We've got Packaging Corp of America, again resistance, support. I've been covering this one this week. Actually, it was in our members' halftime analysis, just looking for potential breakout here. It's one of those names, like I said at the start, that it's just been holding up pretty well. Like I said, it's got decent fundamentals there, at least the fundamentals that I pay attention to. I don't have much time for anything else, but certainly I think it warrants a bit of due diligence. To the other side of it, PayPal, this is going to be in our clients' analysis this weekend. It's now approaching the 2020 market crash bottom. It's not looking good for PayPal. Negative earnings growth. I think the PE is still pretty high. This could still go lower. I know that there's many of you out there that will be feeling a lot of pain with PayPal. I like PayPal as well. I use PayPal, but it does look like it's been a massive victim. I guess the Bitcoin Lightning Network, for those of you that are maybe not familiar with it, it's not looking good for PayPal at the moment. So I think if that starts to break down, we start to get below $80. I think it's probably got a bit more pain ahead of it. I think you can remain bullish on Lam Research, provided it's above 450. Now, just going back to what I was saying at the start about the broader market. Now, I know that not everybody likes shorting the market. I know that ETFs are incredibly useful. I think this is one of those useful ETFs. This was a chart that was provided to our clients last weekend. Now, this is just the inverse of the Russell 2000. So if IWM is going to continue to break down and show weakness, you would expect RWM to go higher, will go higher, I should say. So if you are somebody that is bearish on the market and you're looking for maybe areas to maybe allocate, certainly, you don't have to be entering into short positions or inverse ETFs with a 3-month outlook, with a 6-month outlook. I think the way that I use these types of ETFs and certainly short positions is it's very much a short-term game, and I'm looking at it 1 week out, 2 weeks out, because I understand at the moment we're getting these violent swings in either direction and it's not a lot of fun. So for me, it's really just about batting singles. I'm not heavily allocated to the market at the moment in any way. Yes, I have core long-term holdings, but certainly if we're taking these positions and inverse ETFs, my outlook at the moment is really just 1 to 2 weeks. We've got the commodity index above $29. I think you'd have to be on the moon at the moment to realize that, to not realize that commodities have just been flying over the last 6 months, and potentially the commodity index could be breaking out higher. APA, I like it above 45.50. Again, it's coming back to a lot of these oil and gas names which are putting in incredible earnings as well. We've got Dupont. Now, again, it's one of those charts that makes sense now from both a buy and a short perspective. Now, obviously, I know negative earnings growth isn't great at the moment. I think a lot of names with high PEs and negative earnings growth are being taken out. So this is one that can make sense both directions. On Wednesday, I was actually looking at this as a buy just because of the reaction post-Fed. but certainly the reaction since then hasn't been great. So if this starts to decline hard again, it's probably one of those that's going to get taken to the woodshed. Win, again, high PE in my opinion, below $65. Again, it seems to be one of those names that moves with, China Tech and with Alibaba, etc. So, certainly below $65. I think Church and Dwight, if you're bullish on consumer staples names, defensive area of the market, we're in a bit of a range here. I think there's 12% upside. We know with range-bound names, it's very, very easy. You just buy at the bottom and you sell at the top. But obviously, you need to be aware that if you're doing that, you have to have your get out, in my opinion. Usually they offer a good risk to reward proposition. We've had a breakdown here in the leisure and entertainment ETF PEJ. Now, the way that I'm looking at this at the moment, and if you of course think about the world at the moment, let's just say that, and we've obviously got high inflation, the cost of living is going through the roof. Household bills, energy are going through the roof. There's not a lot of spare cash lying around for the average family or the average couple, the average person to go and spend money on leisure and entertainment. So that's the way that I'm looking at this at the moment. And technically, it's starting to make sense as well. So I think there's probably some names that are aligned with PEJ that you could probably look at as well, or if you don't want to have the issues that could arise by a violent rip higher post earnings from an individual name, I think you can maybe start to consider ETFs as a valid way to go short the market. We've got Amarin, utility company, has pulled back hard from the $100 level, but it does look like it's found support over the last few days at a big level. So that might be something to do some due diligence on. We've had earnings this week with Cloudflare. It's broken below a massive level. Now, let me just say, when Cloudflare was making this massive move last year, it was an absolute rock star for myself, many of our clients. But like all good stocks, I don't get married to anything, and it's broken down. It's obviously a bit of an indecision candle here, but I would be absolutely looking for this to put in some kind of bearish retest. And we also have Dexcom, which, if we look at the PE, is obviously quite high, and we've got some negative earnings growth there as well. So hopefully you've had some value from that. Please do hit the like button, subscribe. Like I said, let me know in the comments what you think. Are we going to go higher? Are we going lower? What stocks should we look at? What ETFs? I do try to get back to all the comments, so feel free to let me know. But if you are wondering what it is that I do, I run honeystocks.com charting. And of course, as you can see, technical analysis is what I do. We provide memberships for our clients, for our members. With our memberships, we provide premium weekend analysis every single Saturday, just keeping our clients and members updated with the market, what's going on, what names, provide high conviction trade ideas, provide a halftime analysis every Wednesday, just a bite-sized premium weekend analysis. We've got access to a wonderful trading community. We've got charting support every single day from myself during market hours. So if you need a second opinion on a chart, there's a facility for you to do that on my platform. I've got a very professional setup. I don't use text message or WhatsApp or anything like that. I've got a very professional site that I use. And if you are somebody that maybe wants to learn technical analysis, maybe you'd like to add it to your process, we've got a lot of our fundamental investors that sign up and of course want to learn technical analysis because they find it useful. If you are in that camp and you are predominantly fundamentals and you want to add technical analysis, you get complete full access to a technical analysis program that I've built for all our clients and members. I'm told it's very, very good. But just to kind of show you just some examples of what I do, this is the alert, I guess, that went out for Williams. It's obviously off and running. Shopify was a short-term mean reversion trade. I think it got as high as maybe 680. Freeport McMoran, we've got Lithium Americas, which was massive. Cloudflare, I touched on that one just a few minutes ago. That was the high conviction alert that went out at $85. Square Inc. met our 30% target there. Zscaler was a rock star. I could go on forever on these. I think, Antero Resources, I touched on that one earlier on as well. There's many examples. And, last week as well, it's not just about taking and identifying buying opportunities. Last week to our clients and members, this is a list of stocks for shorting and obviously recommending inverse ETFs as well. So there's a mixed bag. I'm long and short in the market, but I'm very, very unique in what I do because with the high conviction alerts that go out, I log them all on my website for complete and open transparency. I do not engage in penny stocks or pump and dumps or anything like that. It's all high quality stocks with optimal buy points and management and stop losses, etc. And feel free to go and check that out. Make sure that the stocks that I like to recommend are the types of stocks that you like to buy. Of course, there's a lot of growth tech in here. That's not been the case this year, as I'm sure you all appreciate, but feel free to go and check that out. I think if you are somebody that has a mid-term approach, weeks to months, I think if you're maybe looking to get away from day trading because you just don't get any consistency with it, if you are maybe just too busy to keep on top of the market, if you want to be part of a community, maybe you're just sick of hunting around social media and for ideas, and maybe you're just looking for a bit more confidence, whatever your deal is, feel free to go and check that out. But I can't say it any better than I guess what my members do. Dan has had an incredible performance since March 2020. This is his email to me just saying that he'd wanted to renew. Now, that's not typical. There's obviously a lot of options there on growth tech names, etc. But certainly that's the caliber of investor that's within I guess my community. Sean looks forward to many more years. Got Nick, wants to be a member for life. Just Rocco loves the community, the education. Vince, 2 years in a row, massive performance, individual performances all round. So yeah, feel free to go and check that out. It's all over the website. But if you've stuck around to the end, don't forget to hit the like button. And thanks very much for watching. Appreciate it.